are on our last stretch of the conference program. Thank you for sticking around with us. And for our next topic, as financial instruments and tools become more complex, investors and market players are at a loss. FinTech and TechFin are transforming the world of financial services and disrupting the way we do business. So let's listen to the panel discussion of our panelists with our moderator for the session on FinTech transforming the future of financial services.
Again, please be reminded that your questions to speakers or panelists can be posted through the PIC 2018 conference app. Kindly post your questions through the app so that our moderator can see it. If the question you posted garners the most likes, it will probably be asked. The higher probability it will be asked. So don't be shy to press the heart button.
This is just like my high school anxiety problems. Wala nagla-like ng comment ko. The moderator for this session is a partner and co-head of the Banking and Finance Practice Group and a member of the Corporate and Commercial Practice Group in Kisimbing Torres. He has extensive experience leading and supervising teams in various local and international special projects involving mergers and acquisitions, corporate finance, and project finance transactions for industry leaders in the natural resource, energy, and infrastructure sectors.
He is ranked as a leading lawyer for banking and finance in Chambers Asia Pacific and has been the Philippine partner in charge of certain projects recognized and awarded by various institutions, such as the IFLR Asia Awards 2017 and Asian Legal Business Law Awards 2016. May we please call on stage Attorney TJ Mendoza, partner of Kisimbing Torres.
Hi, good afternoon to everyone. That's a lot of credentials, but nothing to do with FinTech, unfortunately. Anyway, it's my honor to be moderating a panel of 6 distinguished ladies and gentlemen involved in the FinTech space. I'd like to request that as I call your name, each panelist to please proceed to the stage. We'll start with Commissioner Efiro Luis Amatong of the Securities and Exchange Commission. Commissioner Amatong was appointed a commissioner of the SEC in 2014 and is currently the supervising commissioner for the Markets and Securities Regulation Department and the Economic Research and Training Department. Before joining the SEC, Commissioner Amatong was an assistant secretary of the Department of Finance, where he had an active role in the privatization of 74 hectares of the food terminal and was also involved in various public-private partnership projects such as the PPP for School Infrastructure Project Phase 1, the NAIA Expressway Project, and the Automated Fare Collection System. May I also please call on to the stage Mr. Robertson Chiang of Dragon Pay. Mr. Robertson, or Dick Chiang, is an IT and FinTech entrepreneur. He is based out of Manila and is currently on a mission to make e-commerce payments as accessible to as many people as possible, given the challenge of low credit card and banking penetration in a country of over 100 million people. Dragon Pay, the company he founded in 2010, is the local leader in alternative payments supporting various channels ranging from cash payments, online banking, ATM, mobile payments, and international remittance. I'd also like to welcome to the stage Dr. Paul Schultz of Schultz Research. Dr. Schultz is the founder of Schultz Research, set up in 2012, researching financial institutions and financial technology. He has spent 3 decades in research on financials. He has worked for all 3 branches of the US government, including the NSC at the White House. He currently teaches in 3 universities and has written 3 books and authored hundreds of articles on the topic. Could I also please call onto the stage Ms. Erica Valerio from Satoshi Citadel Industries. Ms. Valerio is sentimentally dubbed as SEI's employee number 1 and has been an observer in the brainstorming sessions before the company had been set up in 2014. She officially joined SEI as its manager for sales and a few months later. She has witnessed firsthand how Bitcoin has gone from being a notorious hot topic to what has now emerged as a technology that is poised to spur a revolution across industries and probably drive me out of my current day job, blockchain technology. I'd also now like to call into the stage Mr. Angelito Villanueva. Lito started a fintech business for the PLDT group and pioneered the award-winning and the country's largest digital lending platform service called Lender. Lender was recently named as the Consumer Finance Product of the Year by the Asian Banker. Lito has received over 30 global and regional accolades in 3 years, including being recognized as one of the top 100 Asian fintech leaders and is the first and only Filipino in the list. Last but not least, may I please call on Ms. Yang Yang Zhang of Philippine Digital Assets Exchange. Ms. Zhang is the co-founder and the Chief Strategy Officer of the Philippine Digital Asset Exchange. Yang Yang holds a lifelong passion for disruptive technology and social impact to shaping the product roadmap. After teaching herself to code at the age of 5, she continued her interest in computer science at MIT. And prior to founding PDAX, Yang Yang was the CMO of a global environmental tech company. So there you have it, ladies and gentlemen, your panelists for this afternoon's session. Before we begin and commence with the panel proper, I'd like to ask each of the panelists to please, introduce yourself and the company or the institution that you represent, and briefly, for the benefit of the audience, describe, your involvement in the fintech space. Why don't we start? Yeah.
Hello. Good afternoon. My name is Dick Chang. So as introduced by our moderator, I'm representing DragonPay Corporation. So we were founded in 2010 with the primary mission of bringing the uncarded market to the e-commerce world. So what we basically do, our core line of business is we allow people to shop online. They go to the major shopping websites, even government portals, and they do a transaction, but they perform the payment usually outside of the system. And this could be done through online banking or over-the-counter through cash payment centers or through the banks or the ATM machines or mobile payments. And we basically allow all of these people to do their transaction even without having a credit card. So that is primarily what we do.
Good afternoon to everyone. I'm F. Amatong. I'm one of the commissioners at the SEC. And together with our other financial regulators, we are looking at ways to see how fintech can benefit the Philippines and promote inclusive growth. Most recently, the SEC has just issued its exposure draft for the draft rules on ICOs, or initial coin offerings, that we hope those interested in the audience will comment on, and we'll also be exposing our draft rules on virtual currency exchanges very soon as well. So we look forward to partnering with everyone here in the fintech space in order to make finance more accessible to the Filipino. Thank you very much.
Yeah, so I'm Paul. I work with several of the regulators and currently working with the PBOC and the MAS and a couple of other large sovereign wealth funds in this space of cryptocurrency and its associated relationship to mass rollout of blockchain-based payment systems around the Far East.
My name's Erica Valerio from SEI Ventures Incorporated. We are a blockchain company established in 2014, and we currently run an ecosystem of products, including a remittance platform, a virtual currency exchange that's currently licensed by the BSP, and we also have a mobile wallet, and currently also offer enterprise blockchain solutions to companies, and soon to launch a digital asset exchange as well.
Hi, good afternoon. I'm Lito Villanueva. I'm the Managing Director of FinTech, which is 100% owned by the PLDT Group. And we trailblazed on the digital lending side, which is now known as Lender. which has the most extensive digital footprint in the country, wherein we have disbursed in excess of about 680 million US dollars, or around 35 billion pesos, since the time we launched it in 2015. And that has actually covered 81 provinces all over the country. And on top of that, on top of the digital lending, we are also into digital savings, insurance, micro investments, of course, eKYC, and a whole lot more on innovative, inclusive digital finance. In fact, very recently, we were named the Outstanding Financial Inclusion Partner by the BSP, and among those finalists were the World Bank and the Asia Development Bank. Thank you.
Hi, I'm not sure if this is working. Okay, sorry. Hi, my name is Yang Yang Zhang. I'm one of the co-founders of the Philippine Digital Asset Exchange, or PDAX. We were founded last year in 2017 to create an order book digital asset exchange for the Philippines. So not only do we see digital assets as the future of investment, but we also see it as a way for the Philippines to leapfrog forward and recreate the traditional capital markets on the blockchain. One of the biggest advantages of this is that we will be able to target a much larger segment of the market that has been currently exposed to investments here in this country. And we look forward to being able to work with many of the partners here in this room in order to do so by working on blockchain-enabled financial instruments and other digital assets that may or may not currently be existing.
Thank you, everyone. As you can see, the members of the panel occupy various spaces in the fintech space itself. What we're going to try to achieve here is to allow each one representing particular industry or aspect in the fintech space to talk more about the developments in both local and international, as well as key challenges they may have identified in the course of the recent trends in the fintech industry. Why don't I start with you, Dick, and let you talk more about DragonPay. Could you tell us more about alternative payments, and if possible, describe how you've seen alternative payments develop as an industry here in the Philippines over the past 5 years?
In the case of the Philippines, the credit card penetration, the banking penetration is very low in general. So when people buy things online, most of the time, it is paid through some alternative form of payment, whether it be through online banking, mobile payments, cash payments in most cases. But as far as e-commerce is concerned, here in the Philippines, easily 85 to probably 90% of our transactions are done through cash on delivery, which is very, very high. I guess this is reflective of the fact that people have very poor access to things like e-wallets or online banking or even credit cards. And what we see is every country, because of whatever reason, social, cultural, geographic, political, whatever reason, usually there's a popular form of payment that people are very accustomed to. Like if you look at China, everybody's into QR codes with Alipay and WeChat Pay. You go to Africa, Kenya, Tanzania, everybody's into M-Pesa. In the US, everybody's just using plastic cards. But here in the Philippines, we see that payments are still primarily through cash, and a very, very large part of it is through cash on delivery. So where DragonPay plays in the field we're in is we basically try to bring all of these people to somehow become part of the e-commerce ecosystem by extending our payment channels to the neighborhood pawn shops, the neighborhood groceries, supermarkets, convenience stores, and allow people to buy products or pay for services online.
I think, Lito, that also dovetails into fintech's activities in the mobile space. Could you tell us more about how FinTechnologies Corporation or its various affiliates have attempted to bridge the gap or enhance, the ability or the availability of mobile lending services or other financial services to those marginalized, or as Dick has pointed out, people who are not otherwise used to non-traditional forms of payment or access to financial services?
Well, I think very recently, we've seen the influx of so many fintech players coming into the Philippines. In fact, a good number of them are actually foreign-owned. So, actually, I forgot to mention that we have formed this FinTech Alliance.ph, which I'm the one chairing it now, because we've seen that a number of alternative modalities have to be put in place. Because of course, knowing that President Duterte's drive when he was sworn into office was to get rid of the informal lenders, or the those guys who really would get the whole of you, in terms of high interest rates. So in this case, when we first launched what we call lender, in digital lending, it took a while for us to really convince the banks, because normally before, the financial institutions, or particularly the banks, would always see fintech as the disruptors. So they would, in fact, just to share with you, in several board meetings with chairmen and some presidents of banks, they would always tell me, Lito, you're here because you are here to eat our lunch. So, and they're serious, so talagang poker face. So, and naman the faces of most bank presidents, and of course I see here Felix Bustos, who used to be with Land Bank, ex-Land banker ho ako. So, and the good thing here is that my response to them was, I'm not here to eat your lunch, but I'm here to serve your lunch. So we started with Land Bank way back 2015, and now we have more than 100 bank and non-bank partners participating. Because going digital is inevitable. It is inescapable. You cannot resist going for digital transformation, because the fintechs or the fintech players are not the ones disrupting the existing landscape or ecosystem. It would be the consumers themselves who would be disrupting the businesses. It is not just limited on banking and finance. It practically covers all industries. So you've seen, Kodak has been there, parang wala na, di ba? So a lot of top 5,000 or top 100 corporations, even in other parts of the world, you've seen them you've seen their demise because of digitalization. Because practically at the end of the day, the ultimate device that you would actually need would be your mobile phone. Because your mobile phone is actually your significant other, okay? So because if you are to measure based on empirical data, if you forgot your wallet going to your office or going to the school, 65% of there will be probability that you will make a U-turn to get your wallet. But if you forgot your mobile device in your place, at your home, 98% probability that you will make a U-turn. Because otherwise, pag uwi mo sa bahay, baka wala ka ng asawa. Because you're so dependent on your mobile phone, right? Because your schedule, your health record, etc. Diba? So you use that for your sa gym, etc. And your financial records, etc. So all of those things are practically embedded in your mobile devices. That's why your mobile device is your significant other. Because you are more intimate with your mobile phone as against your wife or your spouses, di ba? Kasi you keep secrets with your mobile phone. Sometimes you cannot actually tell your wife what has happened to you that morning or that afternoon, that you met someone, etc. Di ba? So, but practically, that's why lots of passcode or security measures are actually in place in mobile devices. So that's the thing. So practically, for all intents and purposes, all of the things that we're talking here about blockchain, about cryptocurrency, ICO, digital lending, whatever digital that may be, at the end of the day, it's really the mobile device that will really spell the big difference. Because the one that will, the greatest equalizer in this particular society is definitely the mobile device. Because that's the only accessible tool that is available to every Filipino, no matter where you are in the economic classification. Thank you.
I think Lito and Dick have identified some trends that are occurring in the country. By the way, Lito, I think the solution to keeping secrets in your mobile is keep another phone. That doesn't necessarily mean you do mobile services. But anyway, I wanted to get your thoughts, Paul, based on your experience, operating in the international scene, whether the trends that Lito and Dick have identified, the rising prominence of activity based on mobile services, whether that's consistent with trends you've seen across the region or in the US or in Europe, where you've been active?
Well, if you restrict it to cryptocurrencies, so I'm currently working with a couple of central banks, and they are already. We were talking about one of the policy people as well earlier on. Every central bank is now. This is on their radar screen as something they probably should do, but they're very afraid of doing because they don't understand the consequences. The one country in the world that, I didn't put it up in this presentation, but the one country in the world with more blockchain patents granted to it than any other country in the world is China. And the one central bank that has more patents on blockchain granted to it by an order of magnitude is the People's Bank of China. And so China is going places, so pay attention to China. They will be a leader in how the cryptocurrency and the issuance of sovereign cryptocurrency is going to be rolled out. Japan is another one. Japan is going to roll out its own J-coin, which is going to be pegged to the yen, the yen dollar rate, next year in anticipation of the Olympics. Thailand rolled it out yesterday. And my advice to central banks, we met one the other day, is the faster you do it, the better off you are. Because if I buy $100 of cocaine, right, with cash, right, when that exchange is made, that dollars is gone. If I buy $100 of weapons, those dollars are gone. I can't trace those dollars, but obviously you can trace these the systems of sovereign-based cryptocurrency, and China knows that, man, and China is cracking down on corruption and money laundering and terrorism and other stuff, and so they get it that this is a very effective weapon to deal with all of these illegal activities of people stealing state assets, people dealing in terror in the west of China, and other issues. And so I think this is extremely early days. I think blockchain is the biggest thing. I don't, if anyone says I'm being hyperventilating or I'm bloviating, sorry. This is the biggest thing since the balance sheet in the 1470s. This is the most important invention in 500 years. And number one. Number two, it is a replacement for the HTML, and it is potentially a replacement for Swift. This is extremely important politically. I think all this Bitcoin crap is email. What's email worth? How much does the email cost? Nothing, right? And so we need to make a very profound distinction between cryptocurrencies and blockchain-based activity, especially between central banks. The last point I would make, we had a session in my university where I teach at SIM in Singapore yesterday, and one of the professors made a great point. Don't securitize what is already securitized. Blockchain securitizes time. It securitizes distance. It securitizes value. It securitizes physical assets. Don't use blockchain to securitize something that's already securitized. It's a really great point that people aren't talking about. There's 118 ways to use this, and we're not thinking with enough imagination on this.
Thanks, Paul. I think speaking on cryptocurrency and blockchain technology, we have on the panel Ms. Erica Valerio of SCI and Yang Zhang of PDAX, who I understand intricately involved in these two areas of FinTech. Yang, could you tell us more about Philippine Digital Asset Exchange and you know how the company is looking to offer, what the company is looking to offer its clients and customers in the Philippines, especially in relation to possible new applications of blockchain technology?
I think I definitely agree with what was just said. Blockchain is not for every application. It's not for every company. It's definitely not even for every database. Earlier, I think in the talk about AI's usages in finance, it was very clear that you have to answer three very clear questions when you think about whether blockchain is applicable in a certain situation. Here in the Philippines, it's particularly important because there are not good centralized and secured databases. The reason that things can move faster here with blockchain technology is that the underlying infrastructure right now has not been built over the last few decades, particularly when you think about the traditional capital markets. And so I think for us, our dream and why we are building this exchange and why we're starting here is to create an efficient market that allows Filipinos access to a lot of the financial instruments that are readily available more easily elsewhere in the world, typically through centralized marketplaces. Things that we've thought would be really interesting here would be equity-backed tokens, asset-backed tokens, all of these things that have now entered in the SEC's recently released draft rules on ICO releases or issuances. I think for us, we really want to take the forefront and pioneer the new trends in creating these tokens, not so much ICO tokens, but tokens that reflect traditional instruments that have value and have proven value over the previous decades already. So I think for us, we see ourselves more as a blockchain company than simply an exchange. We created the exchange because here in the Philippines, there are fewer digital asset exchanges and cryptocurrency exchanges than exist in other more developed markets. For example, if you look at neighboring Malaysia, there are 3. If you look at Indonesia, there are 7 very healthy cryptocurrency exchanges. So I think for us here, we see partners in the space, SCI, Coins, as people who will continue to sort of push this frontier forward with us, and we're very excited to do so.
Erica, as SCI, it's employee number 1. Could you talk more about how how you and SCI have been, attempting to build new partnerships with other members of the financial ecosystem, and trying to bridge the company's products and services into a wider market? I ask in the context of you always hear about how FinTech is disrupting the space.
Correct. Yeah.
We at the legal industry or legal practice always like to think of it more as an opportunity for collaboration. And so, I'm sure the audience here would appreciate hearing more about how it's not per se, it is disrupting, but at the same time, it is opening new opportunities and strategic opportunities for other players to work with industry leaders such as yourselves.
Right. Well, you mentioned a very important word, and that's collaboration. It's cooperation. We don't intend to promote the notion of Skynet. Like, you have this, thing that's going to take over everything. And that's not how we positioned ourselves. Although from the beginning, even at 2014, when we would talk about this, people would look at us, very puzzled, like, what are you talking about, Bitcoin? We've always valued the play of having an ecosystem. And that ecosystem, we don't intend to monopolize. And banking will always be there. That function will always be there. And we're not here to take over banks and other financial institutions, but perhaps provide a tool that would be able to give a more efficient service to consumers, better transparency, which I feel is the most valuable quality that the blockchain offers. It's widely known that the Genesis block, the first Bitcoin block ever mined, in it contained a text referring to the bank bailouts. And that's why it's widely perceived that perhaps Bitcoin was invented as a response to the global financial crisis. That's not necessarily an unfounded speculation. But I guess it does communicate that the consumers see the financial markets as a largely opaque thing, that we don't really know what's happening. And perhaps with blockchain, we make it more transparent. We make people aware of what's going on. And we do connect to services that people already know. For instance, when we ran a remittance channel using the blockchain technology, using Bitcoin actually, in 2014, we connected with remittance agents in other territories. They simply used crypto as a settlement mechanism. And that we would pay out through banks, through pawn shops in the Philippines. So to the consumer, it wasn't really a change in technology, but they felt the effect in terms of there's more money in the bank for them, less fees, and it was faster. So we feel that that's the value we put in. It's how we show a technology improving existing services and that we can create this cooperation amongst companies.
Thank you, Erica. Coming on to the Commissioner, I understand that the SEC has recently issued the draft regulations for initial coin offerings, which should present additional opportunities for fintech players to raise capital and gain access to the funding markets. Could the Commissioner please give us an overview of the general processes and approach that the SEC has adopted in coming up with the present draft regulations?
Okay, thank you very much for that question. Let me just step back a bit, and at the risk of making the panel very boring, I'm gonna agree with everybody on the panel, which may or may not be a surprise coming from a regulator. But our view on fintech really, the buzzword that you use is disruptor or disruption, which is the buzzword we use today. I think back in the day we used to call it progress. And you moved away from a paper check to a telegraphic transfer to an electronic transmission to blockchain. And that was just progress. It wasn't disruption per se. And that's really how the regulators view fintech in general. Fintech has progressed from when it was first introduced. It was really, in the beginning, about disintermediation. But now, it's seen within the financial sector and among the regulators as a way to do things better and more efficiently. And that's our attitude to fintech in general and to technologies like blockchain and cryptocurrencies in general. What we're trying to do is solve old problems, issues of trust, issues of transparency, issues of safety with new technology, issues of being able to better facilitate trade in goods, maybe through tokenized assets. And the role of the regulators the paramount role has always been first to provide investor protection so that people know what they're buying, know what they're investing in, and also to provide an orderly framework so that the market can develop in a safe environment. And that's what we're trying to do, not only with the ICO rules, but with the crowdfunding rules that we've already put out and that are out for comment. And hopefully very soon with the virtual currency exchange rules that we're going to put out. We're trying to achieve investor protection, better transparency, but also clarity for potential market players so they know how to behave in a responsible manner, what the expectations of the regulators are. And in so doing, hopefully we will be able to facilitate a technological change, like I think one of the panelists mentioned, leapfrogging ahead of where we are today. And this is especially true in the Philippines because a lot of the markets that exist abroad, for example, in commodities and commodities futures, that you would expect in an agricultural economy like that of the Philippines don't exist. And the promise of the technology is to be able to facilitate that, and we're trying to facilitate that, again, in a safe and orderly manner. And that's, in general, the approach of not only the SEC, but the other regulators, the BSP and the Insurance Commission, to FinTech. And we hope to partner with everyone here and everyone else in the space in order to achieve those goals.
Thank you, Commissioner. This is a question addressed to all the panelists, and I also have a question myself, since we have the Commissioner here and he can't leave. Whether there was anything particularly applicable to your areas in the fintech space that you have identified as, as a stumbling block or as something that's preventing other meaningful development or expansion of your activities into related areas, to ancillary services, that you hope that the Philippine regulators, such as the SEC, could potentially address in the future. bearing in mind their very tight timetables and schedules and all the other responsibilities, of course.
Is it a positive? So, actually, I just want to quickly commend. Actually, our regulators are actually one of the best, in the league of regulators around the world.
I fully agree, by
Yeah,
the way.
so BSP, SEC, IC. I mean, for example, BSP, led by Governor Spinilla, has been very dynamic in terms of really championing inclusive digital finance. I mean, SEC has been there for really, positioning or trying to craft that regulation or circular pertaining to ICO, etc. Because a lot of Filipinos would always have the issue on trust, diba? So even nga yung as simple as ATM security, diba? So you have seen a number of, actually the top 4 banks have actually been quote unquote compromised in a way for some reasons. But I think the very good thing here is the fact that we have the regulators who are very open to progress, not to take fintech players as disruptors. But to your point as to what would be the barriers that would really address the scaling or the acceleration of fintechs, for example, I think one very recent development now is the signing of the national ID system, which I think the biggest barrier ever for financial inclusion is really AML or KYC. So I think that one milestone legislation, which is a national ID system signed by President Duterte yesterday, is really a major accomplishment, because that would really pave the way for more Filipinos to be banked. Because until now, 68% of the population remain unbanked or underserved. So just imagine with the influx of, with the use of digital foundational ID, as what Governor Spinilla said, this could now, open the floodgates for more Filipinos to access formal financial services. Instead of them having to go through the informal lenders, the Bombay's, etc., they will now be able to access finance and other financial services for that matter.
And I would say that I was with the regulator in Jakarta a few months ago, and with the OJK and with the coordinating minister and the central bank. And there's something, and the coordinating minister, who's a politician, who's the man behind JCOE, said, we are not going to sit around and protect you guys, because us protecting you is doing you a huge disservice. Do you understand? And that's what the banks need to be told. The banks need to be told, we can't protect you and we should not protect you. I love what you said. It's called progress. You can either change or become irrelevant. You choose. But I just left Hong Kong. I moved to Singapore. I think Hong Kong is doing a terrible disservice to its banks by protecting them. HSBC and Hang Seng Bank have a 71% market share in Hong Kong. Right? And so Hong Kong is all about protecting cartels. This is crushing Hong Kong. This protection of cartels is killing Hong Kong. And so the more that central banks and regulators protect the incumbents, the more they're going to do grave damage to the economy down the road. So opening up and seeing it as progress, I think, is a fundamental philosophical starting point, which I'm so overjoyed to hear that, because there's many central banks who aren't in the mood to open up. The German Central Bank, the Hong Kong Monetary Authority, and many other central banks around the world, as opposed to Philippines, Singapore. Singapore is doing amazing stuff. And I guarantee you, I have never talked to a regulator who said, we opened up and now we regret it. Every regulator I've talked to has said, we should have opened up sooner. That is the refrain of what's happening now in the world of financial technology.
Thank you, Paul. I think we're moving on to the question and answer, and I've just checked the app, and there are a couple of questions here. Of course, every panelist should feel free to chime in or to respond to these questions, but first, I think that I'd be referring some of these questions based on your participation in the fintech space. We have a question here on how fintech companies balance KYC and anti-money laundering concerns with the main attractions of fintech activities, that is, less contact points and ease of transaction?
I think I can speak to that from a blockchain perspective. For us, I think KYC is obviously a huge concern because we want to maintain our credibility with the regulators and also to protect against any sort of money laundering that happens through cryptocurrency. I think that's high in everyone's concerns whenever that's brought up. So for us, the two solutions, I think, have moved along with technology as well. For us, we use a blockchain-based KYC solution that actually creates a digital ID, similar to what a national ID would be, in order to process the identities of everyone who wants to sign up on the exchange. On the AML side, we have both an on-chain and an off-chain solution. The off-chain solution is what you would normally expect. Ongoing risk-based transaction monitoring. The on-chain solution is a little bit more creative. There are now a lot of services out there that actually perform surveillance on the blockchain itself. Not only does it flag bad actors and make sure that you know what type of activity was participated in. For example, this wallet was associated with gambling flows, or this wallet was associated with a pornography ring. But you can actually track those flows up to 50 transactions back and then freeze those assets on the exchange itself to make sure that it cannot go further and taint more wallets on the blockchain. So I think in these cases, the technology is actually catching up with the need in the regulatory space, and we hope that we can also be part of that conversation as it moves forward.
Thanks, Yang. There's another question here, Commissioner. I think it's addressed to you. Whether, if you are aware, there were any plans for regulators to use blockchain technology to improve their own internal processes?
Yeah, actually, yes. The answer is yes. Our chairman, Emil Aquino, has pointed out that there was a discussion about like who uses a database that's a multi-user database. The Securities and Exchange Commission has a giant database of companies that is multi-user. So we're looking at ways. Now, so two things that I'd like to say. First of all, thank you very much for bringing up KYC. KYC, the regulators have noted for a long time, this is an area where we would welcome fintech solutions, blockchain, anything that would help onboard people more and make them part of the formal financial system. The other thing, and that's connected to the question of our own improvement of our IT systems, is turns out regulators are not the most techie people in the world. You know, we want it, but we don't really know how to get it. And this is why we come to these fora and we try to invite cooperation, as you pointed out, with private sector and academia, because we're not quite sure as to how to use the technology. We want to access the technology, but we don't necessarily have the solutions ourselves. And we are looking at partnership with the private sector to help bridge that gap. So we're looking for the solutions to come from the private sector.
One more question here. It's directed to the panelists involved in cryptocurrency. The value of cryptocurrency is extremely volatile. Do you think it's appropriate for investors in the Philippines? Of course, they're going to say yes. They're involved in cryptocurrency. But anyway, given that we Filipinos, or here in the Philippines, people have a relatively simple local market, do you think that investors have adequate knowledge to understand the risk and reward of these kinds of innovations?
Yeah, can I say something? The Wall Street Journal had an article yesterday that said that basically front-running and insider trading had created a windfall of more than $300 billion for a small number of players in 2017. So this cryptocurrency market currently is riddled with insider trading. All this stuff, if I tried that and I'm a licensed person with the SFC in Hong Kong, I'd be in jail, right? They would all be in jail if they were trading equities. So there is a lot of insider trading and front running that needs to be cleaned out. And I believe that, I guess I'm a little different. I believe the faster this is licensed, the better.
I think that
go ahead.
having, do you want to? Sure. I think that having regulatory clarity definitely helps with preventing any of the insider trading, front-running wash trades that have riddled this industry so far. When it comes to the volatility of cryptocurrency, I think a lot of people are looking at Bitcoin and the price of Bitcoin as it has skyrocketed and plummeted over the last few months. However, I think that the value of this technology really does not lie in Bitcoin, in the cryptocurrencies that were created years ago. I think it depends on what people will do with this technology and what they will apply it to now. So I think for us, one of the reasons that we believe so much in asset-backed tokens, in traditional financial instruments on the blockchain, is that they will be less volatile. They will be robust and valuable financial instruments that Filipinos can access for the first time. And so I think for us, we answer that really very clearly by saying, we know that so far, some of the cryptocurrencies have been very volatile. There are definitely ICOs that have been scams, and the SEC is very much aware of that. But I think that as regulations come into this space, as the SEC is part of the conversation in creating these new financial instruments on the blockchain, that they will become both less volatile and more valuable for the typical consumer.
Erica?
Yeah, so we've been in this business for a few years now, and part of that business is selling cryptocurrencies, particularly Bitcoin. And honestly, when people come to us, especially late last year when the price was just crazy, it was just rallying, people would come to us with their checkbooks ready, admitting that they don't understand, but they want to get some piece of the action. And what we do is we really scare them. We do ask, so are you ready to lose your money? Because if your answer is no, just maybe you can start with very little. Because we value education. We value the technology over this secondary market of investment. And so we want people to get into this as informed as possible. So is the mass market ready to get into this? Perhaps not. But what we should do is exert a lot of effort in educating. That's why we welcome the regulations, because it's a way to usher us into this market where it's more transparent and there's more protection for consumers. And there's a long way to go, but we're here, and I've seen even our customers have matured over the years as well. Even when the markets went down, they mostly just shrug it off and say, I'll just try again, maybe.
I think that's all the time we have for this panel. Thank you very much for participating.